Hi again, this is Rick with AmazingAccuracy.com. Today is November 10th, 2012. It is currently 5:39 p.m. In this video, what I like to do is take a few minutes and to go over WD Gann's trend line indicator. Now, the reason why I want to do this and share this information with you is because it is, in my opinion, that this very simple to apply indicator is extremely important for anyone who is serious about trading and market timing and low risk and high profit potential. In other words, if you are serious about getting in your trades at the right time, being on the right side of the trade, you definitely want to have an idea of which way the market is currently moving, and the trend line indicator is really good at exposing whether the buying forces or the selling forces, which one is actually greater at any particular time. So it's really good for identifying the current trend. It is not a forecasting tool. Obviously you would know that forecasting is what I do. If you follow my work, my materials, my videos and articles and so forth. But it is the basis to every analysis that I do on price charts each and every day. I start off first by looking at the swing patterns of the market I am analyzing before I even attempt to determine what is likely to occur next in the market utilizing my forecasting methods. Okay, so putting forecasting to the side, let me share with you WD Gann's trend line indicator. On the screen here is going to be the quotes from WD Gann from his commodities course. So you may want to freeze the video just so that you can read it, and then unfreeze it, unpause it, so that we can continue. Okay, hopefully you've taken a moment to read that information. Now, it was not complete in its entirety there. I just wanted to give you the basic information. It did not address how to handle outside bars and inside bars, for example, but we will cover that in this video. Okay, so let's just get started because there's a lot to cover here. The first thing that we're going to want to do is we want a starting point, and what we'll do is we'll just pick this bottom here in the crude oil daily chart to use as our starting point. You can do this on a daily, weekly, monthly, yearly, hourly, minute, 5-minute, 15-minute. It doesn't matter what the time frame is on the chart. Okay, every time frame has its own trend within trend within trend. So doing a top-down approach to analysis is always a good idea. In this case, we're going to look at a daily chart. We're going to start with our trend line is going to start from this very bottom here, okay? And we note that the prices are starting to make higher high. We can see in the next bar here it makes a higher high. With this trend line indicator, we know that if the market makes a higher high, we can advance our line. I'm just going to start drawing this little trend line in here so that we'll have a little visual. And so we go from where that bottom is here to this higher high. Now, as each higher high occurs, we would continually advance that line upwards. Excuse me. And so in this case here, you notice it goes higher here, it's higher here, 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 and then it goes lower. Because of that, we can move that line all the way up until it no longer makes a higher high, which is up to this point. I'm just going to go ahead and remove that line and and advance this all the way up to the top here. Okay, there we go. Now that we have a lower low following, okay, the trend line indicator is going to change directions. We're now going to go from where our last high is here, where our trend line is, to this new lower low. Now, if we continue to get lower low bars following, we would continue to move that line lower. But in this case, it's switched direction again, and it's going back up. Before we do that, though, I want to explain something. As soon as the trend line indicator changed direction, in this case, it went from moving up to moving down, it confirms your swing top. This is a swing top, this point that you see right here, because the trend line indicator goes up to this top and then it swung down. This is a confirmed swing top as opposed to a possible swing top or bottom where, like for example, in our F-Dates Market Timing membership, because we are in the business of forecasting future tops and bottoms to the day, we may be at a particular day where we're expecting, let's say, a bottom. Until prices start going up, it does not confirm that as a bottom. We call that a possible bottom or a probable or potential swing bottom. But when it actually confirms, because the line swings, like this trend line here, then we have what's called a confirmed swing. So in this case, we have a confirmed swing top. Now we're down here, and we see that we got another higher high. So it goes higher high here. As soon as that happens, this line moves up. We've confirmed a swing bottom. We have a confirmed swing top followed by a confirmed swing bottom. Prices continually go higher overall, so we continually move that line up, and then the next bar makes a lower low. The direction has changed once again, and we move that line down. We have a top, we have a swing bottom, and we have this swing top right here. This is followed by now an inside bar. An inside bar is when we don't make a higher high or a lower low. When you have an inside bar, do not advance the trend line indicator, because remember the rules that you have to have a higher high or a lower low before the line can be moved. The next bar, however, does make a higher high, as we can see here, and we can start advancing our line up. So we'll go right up to that new higher high, and then the next bar we can see is a higher high. We'll just move it to that line, and then the next one does not make a higher high but makes a lower low, so we have to end right there. We've confirmed that as a swing bottom. Okay, very simple to do. So finishing this up here so we can get to outside bars. I'm going to go from here, get a lower low, inside bar, lower, lower, knowing lower. Okay, it stops right there. From here, prices inside bar, we do nothing. Got a higher high, we go to here. Higher high, we go here to here. Then it doesn't go higher, it goes lower, so it ends here. Opposite direction, lower, lower. It's going higher here, so we have to stop here. We go from there to this new high. Lower low, lower low, lower low, higher high. We end here. We move this over. Higher high. Can't go to here because we have a lower low here, so we stop here. Then we come down to here, new lower low. And at this point we got to stop because we are now at an outside bar. An outside bar is when you have a higher high and a lower low. You have both, a higher high and a lower low. An outside bar has the potential to become either a swing top or a swing bottom. And you could pretty much guarantee it will be one or the other unless it's followed by even another outside bar, which, you know, those really do get messy. Anyway, whenever you have an outside bar, we don't know whether we should move down to the next lower low. In this case, because we're coming off of a trend line low here, that's where our indicator is. It's at a low right now. Do we go first to the lower low because it made a new lower low? Or do we go to the higher high because it made a higher high? It all depends on the price bars that follow. So with an outside bar, we usually have to wait to see what the price does after the outside bar, so we know which end of the outside bar we need to go to next before we can continue on. In this case here, price bars started making lower lows following the outside bar. Since lower low is following the outside bar obviously then has to be a top for the line now to go down to those new lower lows, right? So we know that in order to do that, we need to first go to that top. Then, with that top identified, we can start making it down to these lower lows, lower low, lower low, and so forth. There we have the outside bar is clearly a swing top. Now, excuse me, because that's a swing top, that becomes a swing bottom. At first sight, looking at that on without these lines, if these lines were not on here, you would look at that bar and it would not look like a swing bottom to you, okay? Because this is lower than this, it would, how could that be a swing bottom? See, that's clearly a bottom, that's clearly a bottom, here and here and here. Because they're followed by price bars that have higher lows and higher highs. In this case, this swing bottom is followed by a lower low than itself. But because it swung up to the high first, it confirmed it as a swing bottom, but then within the same day, it then took that bottom out. But without the trend line indicator, it would have been difficult to have noticed that there was actually a swing bottom there. Okay, that's key. Now, let's look at another scenario here. What if, for example, that instead of this outside bar being followed by lower lows, it was followed by higher highs? Well, if the outside bar is followed by higher highs, what would that make the inside bar? It'd make it a bottom, right? Because the bottom would precede these moves going up. In that case, what we would end up doing is we would take our line from the last place that it was, which is at this low, continue down to the low of that outside bar. Then from there, we would be able to swing to that new higher high that's following the outside bar, which is going to be higher than that, and then each higher high from that. And so you would have this pattern that you see right here. And by having this pattern here, for example, going from here and then up, that's a swing bottom, making that the last swing top. And in this case, obviously, that would not have been the swing bottom, because the outside bar would have then been the ultimate swing bottom prior to prices moving up. So you always want to see what happens after the outside bar. Okay, now that we've covered the 1 bar swing, I'm going to cover real quick the 2 bar swing. As with the 1 bar swing, of course, we already know that it only takes 1 higher high to move the line up and 1 lower low to move the line down. With a 2 bar, to move the line from the last location, you must have at least, in this case, the trend line low here at this bottom, we need at least 2 higher highs, a count of 2, before the line can start moving. So when we had this higher high here, that's just a count of 1. But when we had this second one, now we have a count of 2. The line now can move up to that second higher high. And then each higher high from that point, it would just continue up at that point. Okay? And then we can see that we had a lower low here, but that's only a count of 1. So that doesn't move our line from where it is right now. Okay? And then the price here made a higher high, but it's not higher than where the line already is, so nothing happens. Here's another higher high, but it's not higher than where the line is, so nothing happens. Then we have another lower low, and if you look at it, it's lower than this one, so we have a count of 1 lower low, 2 lower low. We can move the line down. So we're capturing the extremes now. This is a higher, you might say, it's more of a magnification of things. These are more significant swings as opposed to these minor swings with the 1 bar swing. Now we're getting major swings, okay, which gives you the real power behind the trend. Following this low, we have nothing here. We have 1 higher high. We have 2 higher high. We can move the line up. And then for each higher high following, we could keep the line up. But in this case, there are no others because it starts making 2 or more lower lows until it comes to here. And then it starts making, here's 2 or more higher highs. And it goes to here. Excuse me. I don't know why I have this cough today. And to finish it out, I'm going to mark the extremes here, the count of 2s, which would be like this. And you can see how it looks different than when we were doing the 1. These are more significant turns. And we can see that when we have higher swing bottoms, we know that the trend is up. And when we have lower swing tops, we know the trend is down. trend line indicator. Okay. All right, I hope you enjoyed this video. Again, it's the trendline video is very important to get the lay of the land as to whether the market is overall bullish or bearish, or even sideways for that matter, by looking at where the swing tops and swing bottoms are forming in relation to each other. Higher swing tops and bottoms, specifically higher swing bottoms, is a bull trend. Lower swing tops, lower swing bottoms is a bear trend. Thanks again for watching. If you haven't already, please subscribe to my YouTube channel so you can be informed of all future forecast and lesson videos. And I have a free newsletter, market forecasting newsletter, at the website at www.amazingaccuracy.com. So please come join my list. And thank you again for watching. We'll see you in the next video.